Hello, everyone. I'm last presenter, and I appreciate everybody for hanging in here. Joe, thanks for having us down again. I really appreciate it, and it's been a really good conference. I'm from Boston, Massachusetts. I'm a big New England Patriot fan. I want to get this out of the way. Any Giant fans in the room? Congratulations. It's part of my therapy to acknowledge and move on. So, just like Eric was saying, I want to talk to you about two things. Number one, I want to talk to you about an annuity product that stands alone really in the industry. It's really put Phoenix on the map when it comes to fixed indexed annuity sales. But before I get there, I want to talk to you a little bit about the process by which we build product and help you market to your clients, be it seminars or point-of-sale materials. You have these brochures on the tables. I laid them out earlier. Go ahead and you can take a look at that. What this program is it's available to you in multiple formats. We have it in PDF, we have it in PowerPoint, we have it in the hard copies that you have. So whether you're doing seminars or if you're looking for the types of materials that you can use to help you do more and better business, this program will help you get there. Obviously, as you see this thing roll, we believe that people have to define the type of life that they want to live in retirement. Obviously, and once they do that, then they need to start preparing for the risks. Longevity. I'm glad that we spent some time on longevity yesterday, so I'm not gonna go through the statistics and so forth, but I want you to think about a couple things with longevity. The root of a lot of problems that we're facing today boils down to longevity. So you take a look at Europe and you take a look at countries like Greece, Spain, Italy, and Portugal, right? They're getting old and older, okay? So they have some problems. When you think about Germany, France, and England, they're not in as much trouble, and the reason is because of two major world wars, right, that impacted the population base of those countries. Bring it over here to the United States, and Steve talked about in the 1930s, life expectancy was 62 years of age. Politically, that's when they started the Social Security system, right? It's part of the New Deal legislation underneath FDR. Statistically, you were dead at 62. Fast forward to today, it's drastically different. In the 20s and 30s, there were a lot of infant mortality. The infant mortality rate was much higher, but you can use this as a stat. 50% of American males who were age 21 in the 20s, 50% did not reach age 62. It's a pretty dramatic number. So, of course, now, today, people are living a lot longer. The longer you live, the more you have to prepare for inflation in retirement. Let's see if we get that going. Again, this is a nice slide that you can use. I know you all recognize numbers from with regard to the inflation numbers. This flat screen TV right here, I can go buy this for $400, right? At any store, $400. I spend $400 a week in groceries. Family of 5, dog and a cat. Hate the cat, love the dog. So, inflation is real. So when you're talking with your retirees, when you take a look at prescription drugs and health care and so forth, there are some additional charts that I'm not going to go through here today, but all this information is in this brochure that you can use. Investment losses just before or after your retirement can significantly impact your portfolio sustainability. Take a look at these numbers. When you're accumulating assets, you can sort of let the volatility, help you along the way. You have two portfolios here, Portfolio A and Portfolio B. They both average 6% rate of return. But the sequence of returns were just a little bit different. When you take a look at Portfolio A, you had 3 down years early on. You take a look at Portfolio B, we put the same down years at the end, okay? These portfolios averaged 6%, and you see that when someone puts $500,000 in, you ended up at the same spot, 892 and change. It changes once you start pulling money out of the annuity program. Again, the same portfolios, Portfolio A, Portfolio B. You average 6% rate of return. The sequence of return is just a little bit different. It's the same illustration. But of course, in Portfolio A, you start taking money out, and if you had some down years early on, you're sitting at $292,000. So we know that a lot of Americans, right, would be really concerned with this number dwindling, especially if they were utilizing this asset to pull income off of. So again, this is all client-approved material that you can use with clients, as you talk to them. And lifestyle. I think this is a big topic as well because retirement has changed for sure. I don't know about everyone here in this room, but if you're not working, what are you doing? I know what I'm doing on the weekends. Spending money, right? If I'm not working, I'm spending money. My wife doesn't work, hasn't worked for 11 years. I kid you not, I just called her. Hey, where are you, Nancy? Actually, I'm getting my toenails done. She spends money. She does not work. She's out spending money, right? When I'm home on the weekend, I spend money. Home Depot, you're walking to Home Depot. How much you spend at Home Depot when you go? $100 every time. You go for a nut and bolt, you end up spending $100. That's what I do. That's crazy. So lifestyle, how are you going to live in retirement? So this is the type of program that we like to build out, and we build products that can help people, sort of secure their retirement. So when you say, know where you stand today, plan for the risk, secure retirement, this is what we're all about. Which brings us to the personal income annuity. So I've been at Phoenix for 11 years, and I've been in the business for almost 20 years. And I got to tell you, when we rolled out this product, it's been one of the most successful launches of any annuity product that I've been witness to. We rolled this out in May of last year. This product is the reason why we did $1 billion last year. We cracked the top 10 in the fixed index annuity market space. We really just got going within the last 2 years. We do more business in this product than all of our other annuities combined. That's how powerful it is, and it really isn't a class by itself. So what is it? So when you go into this brochure, and actually the brochures are on your desk on the tables as well. When you open up this brochure, we like to continue with the same sort of themes that we use in the Plan Right, Retire Right program. So again, this is all client-approved material that you can use. We think it's prudent for people to take a look at what are their essential lifestyle expenses and tie it up with a guaranteed form of income stream. And we saw some of this right earlier, pension plans, Social Security, and annuity income. What we want to do is we want to focus our attentions on what are those guaranteed forms of income, be it pension plans, Social Security, and annuity. And that's what we've done with the personal income annuity product. And we get right back into some charts and graphs. Pension plans, and I know that some people have talked about the three-legged stool and so forth. Pension plans are on a decline. We all know that. I saw a statistic the other day that 12% of Americans are covered by some sort of pension plan still today. But of the 12%, 8% work for the government. 8 out of 12. So that means 4% of private sector employees are covered by some sort of pension plan. So they're really pushing, right, the responsibility onto us to set money aside in our 401k plans and our defined contribution plans and so forth. So again, 12%, 8 work for the government. So there's a decline in the number of people who are covered by pension plans. And Social Security, I talked about longevity. I mean, it is the root of all problems that we face here today in the United States, right? We can't spend enough time talking to our clients about longevity. Mr. and Mrs. Smith, you're 65. How long are you going to live in retirement? How long do you want to live? And how do you want to live your life? Social Security replacement rates are dwindling. So people are looking to, get monies from other sources other than just Social Security so that they can maintain their lifestyle in retirement. So, where can you turn? And of course, that's where we go to annuities, confidence, and retirement. I don't know about you, but I feel as though we're in the golden age of the annuity business, right? And I got to tell you why. So I've been in this business for almost 20 years. It's very refreshing to now open up the Wall Street Journal or look at some of these money magazines, or you go to Fidelity.com, which manages assets, right? That's how they make money. They manage assets. So you go out to these websites and you go to these publications, and what do you see them now finally talking about? Geez, maybe clients ought to take a portion of their money and then buy one of these income annuity products so that they can not outlive their money. And you see it more and more. And it wasn't always like this 10 years ago, was it? So you see this now coming about. So we know that people who own annuities have a much higher degree of confidence that they're not going to run out of money in their retirement years. So the personal income annuity, what is it? We had the brilliant idea at Phoenix, first off, by calling it the personal income annuity. I got to tell you, we wanted to call this the personal pension plan. But our compliance area sort of pulled back the reins a little bit. So in a stroke of genius, I kid you not, in a stroke of genius, we came up with this name, personal income annuity. So it sort of branded itself. So what we did is we said, you know what? Instead of giving an upfront cash bonus, why don't we see if we can drive as much bonus as we can into these income riders? That is really the reason why people buy this product. So we wanted to put as much bonus into those income riders as we could. So the personal income annuity is a 10-year fixed indexed annuity product. Here you see some of the particulars. It's a 15. At the minimum is $15,000. We take up to $1 million. It's available for both qualified and non-qualified money. You got some liquidity features and so forth. You've got multiple indexes where a person can put their money in, be it your typical standard 1-year S&P. We have a monthly. We have a 5-year program in certain states. We have a fixed account and so forth. But the area and the reason why people buy this product is because of the guaranteed lifetime income strategy options. So what you have is you have one 10-year fixed index annuity product, and what you have available are 2 income riders that you can choose at the time of purchase. So it's one annuity, 2 different riders inside of the annuity product that you can choose. Income strategy for today and income strategy for tomorrow. And I'm just going to spend a couple minutes to go over these. What are they? The income strategy for today. This rider is really designed for those folks who are looking to take money out of their annuity within the first 3 years that they own it, okay? And what we do is we give a bonus of either 30, 37.5, or 45% on top of the income benefit base, okay, for those individuals who are looking to take income out. How we are a little bit different from everybody else, okay, is the fact that that 30% bonus is available immediately. There is no wait. You don't have to wait 1 year. So literally, okay, if you have a client who's taking money out of a portfolio today, right now, in any form or fashion, and you want to perhaps run an income quote to find out how much income you can drive from one of these annuity products, you could take it to them and say, listen, I can give you an immediate raise on your portfolio right now. There is no wait. So this is really one of the reasons why we do so much business. It sets us apart. And the income amounts that you can get out of this income today strategy, we don't compete against other fixed index annuity products. We compete against SPIAs. I encourage you to run the numbers yourself. I encourage you to run numbers on a SPIA. I encourage you to run a lifetime with cash refund option. And I think that there's a good chance that we may beat it quite often. That's how good this payout is. 30, 37.5, or 45%. Of course, depending on the age, right? The older you are, the more money you can get out. We have both single and spousal options as well. So I know that I can compete for a lot of that business, for that income that's coming out early. I encourage you to take a look at our spousal options because we're even more competitive when you add 2 lives. That's the income strategy for today. The income strategy for tomorrow is a rider that is designed for those folks who want to take money at some point out in the future. And we roll it up at 14% per year. That's a big number, 14% simple interest. Somebody puts $100,000 in 10 years, it's $240,000. Depending on their age, right? The older they are, the more money they can take out. Between, 3 and 7% over single life. Spousal, it's 2.5 up to 6.5. Again, depending on the person's age. Okay? And the income strategy for today, right? Especially with the income coming out immediately, no one can compete with us. There's not a company that can compete. On the income strategy for tomorrow, there are plenty of companies that can compete with us in that space, but I encourage you to run the numbers because depending on how old the client is, we're going to win in a few cells there. So, again, one annuity, 2 different riders. So I mentioned we have a calculator. You could go ahead and run numbers yourself. It's very easy to use. It's got a great spreadsheet. We find a lot of people will get 2 sales from this because what it does is it shows both riders. It shows them the income strategy for today. A lot of times people will say, well, what's this? Why is this income amount increasing on this right-hand side? Okay? So, somebody puts money into the income strategy for today. They want to get a raise at some point in the future. They like the idea of having that 14%. Sort of works like a pension plan, right? There's no formula. We could calculate for them 7, 8, 9, 10 years down the road. We can pay you X amount of dollars if you give us this much money. So it's a great tool to use. From a marketing standpoint, what's nice also is, we really put a lot of time, effort, money, and energy into delivering point-of-sale materials. So, for instance, in these PDFs, if you want to do an illustration, but then you want to make it look colorful and sort of match up with the brochures and with the Plan Right Retire Right material, you can go ahead and put the client's information in there. You can print off an entire presentation to take it to your clients so you can talk to them about, the program and so forth. So again, the materials. The brochures are on the tables. You've got summary sheets. You've got client-approved information on the living benefit riders and so forth. That's all in there. We've got marketing, we got marketing flyers that you can get, postcards and so forth. And with that said, I appreciate your time. I wanted to keep it short and sweet. Just want to see if anyone had any questions.